interest. So they did two other things. The funded depreciation account can be an interest-bearing account. And an operating account for a business cannot be, right? We understand. Well, you might or might not know that. When you have an operating account for a business, it cannot gain interest, okay? So it can gain interest, and the interest is not taxable. And the one thing I teach my clients to do is to build it as a retirement account, because here's one of the neat caveats with that funded depreciation account. Whatever money is in that account when you decide to retire and close that business or sell that business, if you're past retirement age, you get to keep it. You don't ever have to pay taxes on it. That's a nice little savings plan there. You don't pay taxes when you get it. You get to gain interest on it. You don't have to pay any taxes on it while you're getting it. And then if you wait till you're over 59 and a half, you can take the money out when you close your business or sell your business, and it's all yours. Nice, right? Okay. This is a concept. These are things that don't sound like they might be big things, but they end up being very big things by the end. So the more you understand about business and running it by the numbers, taking advantage of the things you can, the better off you will be. Okay? How many people know what a sweep account is? I'll give you a second example. Okay, Mike, can you explain a sweep account?
Yeah, it's one where you have interest that accrue on the account, and it sweeps typically overnight. So you get that interest, and it goes back to a normal account the next day. So you take advantage of large amounts of money that you may have in the account.
Okay, so in 1973, the government said it's not fair that you don't pay interest to businesses. Because what does the bank do with your money, your deposit money? They invest it, right? And they make interest and they make money off of your money. Okay? That's why you can get a CD, and the longer you lock the CD in, the more money they give you, because that's more time. They know they can play with your money before they have to give it to you, right? And if you want it early, they charge you a penalty, so you get double dipped. Okay. I mentioned that the operating account can't make money, okay? But the sweep account can. Now, guess what? The operating account is just an account that isn't called a sweep account. The sweep account is just a designation of the account. So in other words, what I mean is you can keep your same account number. It's not usually worth doing until you have a decent amount of money in your account typically, because the fees on a sweep account are usually like around $125 a month, so they're a little bit more than a regular account. But let me use an example. I mentioned I was the director for a car dealership group. A car dealership, which by the way, they do not make as much money as people think, but because the product is so expensive, at any given time, any new car dealership will have between $1 million and $2 million in its operating account because of money that they're coming in, going out, writing checks, whatever. Okay? When I did that for our 8-store dealer group, it made a tremendous amount of money for the dealership. Okay? Sweep account interest is not taxable as well, just like the funded depreciation account. So you don't even have to pay taxes on it. Now, I'll give you an example. If you typically have $125,000 in your account on any given day, you will typically make between $2,000 and $3,000 a year in interest. It's significant, right? Why is that so significant? Let's take a look at something. This board's going to be a mess, I can tell. Okay. Who else owns a business besides Clarence? Somebody stuck in the back. Hey, can you say your name and what type of business you have? A car dealership. Oh, so you got my reference when I said car dealerships don't make as much as you think they do. Okay. Do you know what the average profit margin is for a car dealership? Okay. Okay. Let me help you out. On a new car dealership, the average profit is between 1% and 1.5%. That means for every $100 they bring in, they make between $1 and $1.50. Okay. So what kind of business?
Car wash.
Car wash. Okay. Good, that's kind of like right in the middle. Do you know what your profit margin is for a car wash type place? Okay, everybody, if you want, write yourself a note. If you will email me anytime after the seminar, what I'm going to do, well, I won't do it, Errol's going to do it. But what Errol's going to do is Errol is going to run an analysis on your industry for you. So if you tell her you have a car wash, she's going to run an analysis and prepare a report for you that tells you what the average person in your industry in Baton Rouge is doing in sales, how much they're paying in labor, how much they're paying on supplies, how much everything, and how much their profit margin is on the bottom line, so that you have something to compare to. We're just doing that as part of people doing this for the seminar. That's something that we do for our clients. So at any rate, you have a business that I would, if I had to guess, and we'll see how close we are when Ariel actually runs it, but if I have to guess, I'm probably going to say it's probably going to be somewhere around 11 or 12%. Okay? Anybody who has a service type business, doesn't have inventory, doesn't have big supply costs? There you go. Clarence, do you know what a good profit margin would be for your type of business? 20%. Okay. Most service industries are between 20 and 25%. Clarence actually has one that's a little more labor intensive than most service type businesses, and doesn't get to charge the same way as a lot. A business that's more like like my company, for instance, we would want to be at least 30% profitability. So now we're at the highest level, 30%. What does that mean? If you want to make more money, what do you think most business owners tell me they want to do? Charge more, which does what? Increases the sales, right? Sales. Everybody, I need more sales, I need more sales, I need more sales, right? Okay. If you want to put $1,000 on your bottom line, if you want to put $1,000 more in your pocket, and you operate at a 30% profit margin, have an idea of what that means you have to do in sales? Anybody?
300,000. Oh, wait,
That's
3,000.
33,000. If you want to put $1,000, I'm sorry, 3,000. You were right, because I forgot I used the $1,000. I usually use a bigger number like 10,000. But so $1,000, you have to do $3,000 or more in sales, right, to obtain that. But if you eliminate $1,000 worth of expenditures, how much more did you put in your bottom line? $1,000, right? Okay. In your folder, there is a one that looks like this. It's called cost reduction versus sales. I'm sorry, they're a little out of order again because we're doing this slightly out of order, so we're going to get back to those. I think it was about 4 or 5 pages in. Should be one more page past that one. There you go. Okay, everybody see this? What we've done here is we've shown you on a little chart that if you operate at a 10% profit margin and you have a reduction of $500 in costs, which puts $500 in your pocket, you have to do $5,000 in sales to do the same thing. So what's it easier to do? Is it easier to cut your expenses by $500 or increase your sales by $5,000?
Much more control over cutting your
And you have a lot more control over cutting your expenses, right? Okay? So this you can use as a guideline, but this gets very, very expensive, especially if you're a car dealership. Look at how important it is for a car dealership to control their expenses. I mean, if they want to make $500 more, they've got to do $50,000 in sales. That's 2 cars. That's a lot of difference as opposed to just watching $500. We all the time, I mean, we look at our things and we say, at the restaurant, a restaurant's only going to have a profitability of, around 15%, somewhere around there, 10 to 15%. If we're spending $100 a month on something that we don't need, how much difference is that in sales? You're talking about a restaurant where you have an average sale of $10 or something. You got to do a whole lot of sales just to overcome that amount, okay? So cost reduction versus sales is your next big thing. So again, going back to looking at the numbers. Why are they important? Understanding where you're spending your money, how you're spending your money, right? Operating efficiently. It's not being a miser. We don't want you to not spend money to grow. Euripides in 234 AD is the one that coined the expression, you have to spend money to make money, right? And if it was true 2,000 years ago, it's true today even more because of how much you have to get your word out there. So I'm not advocating not spending money, but just watch where and how you're spending your money, okay? Hopefully, again, you all have a good accountant or somebody that's watching your numbers for you from the outside. I'll give you another example. Walmart, which, you know, we consult for them as well. But Walmart has cheap prices, right? So it always worries me, though, when I see one of my clients buying ink and stuff at Walmart. And I advise them against it. I tell them to go to Office Depot, which is more expensive. Why do I do that? Anybody have an idea?
Is it a better product that lasts
It's the same name, same HP ink, same whatever. But Walmart uses only refurbished ink. You get 30% less yield than the new ink that Office Depot sells. So you might save 6, 7, 8% on it by buying it at Walmart, but you actually end up spending more because of the fact that it's not new ink. So it doesn't last as long. Okay? Now, there's some products that you can get at Walmart that are less expensive. Okay? You can typically get pens, like if you want cheap pens, not like a real nice pen, but if you just want to buy some big pens, you can typically get them in bulk cheaper at Walmart than you can at Office Depot. Okay? So I'm not advocating one over the other. It's just understanding the importance of paying attention to your numbers. Paying attention to things like how much paper you use, okay? Paper is a product that doesn't go bad, right? Okay. Where do you think you can get paper cheaper, at Walmart or Office Depot?
I think Walmart.
Walmart, you can on any typical day. But you know what? Every other week, Office Depot advertises that $54.99 box for $27.99. And if you've paid attention to your supplies and you know what your business needs, when you see it on sale, you go and grab it. Because if you run out, then you're forced to go pay whatever price you have to pay for it.